What are the important asset classes that you should know for your own investment? And what asset types are widely covered in today's financial industry, including investment banking, sales and trading, or buy-side funds? Today, we're going to cover 6 asset profiles from equities, fixed income, real estate, to cash equivalents. First, let's dive into the domestic equities. Domestic equities represent a partial ownership stake in a US-based business. The expected annual returns are medium to high, and volatility is also medium to high. Is there any inflation protection? Yes, it is. And the currency denomination, as the name suggested, is US dollar. Other distinguishing features include that domestic equities usually offers dividends in addition to gains through the change in the share price. Besides domestic equities, you should know there are the overseas equities, which represent a partial ownership stake in an overseas business. Expected return is high and the volatility is also high. Any inflation protection? Yes, it is. And the currency denomination is non-US dollars. Other features is currency risk. You should consider to hedge the currency risk if needed. Now let's move on to our next asset class, fixed income. And there are 2 types of fixed income: nominal bonds and inflation-linked bonds. Nominal bonds usually pays a set of rate of interest over a given period, then return investors' principal. The expected annual returns is between low to medium, and the volatility is low. There is no inflation protection. The currency could be US dollar or non-US dollar. Bonds have an inherent risk of bond issuers defaulting, and this could be minimized if the bond is issued by a developed country's government, such as US Treasury bonds. Another type of fixed income is inflation-linked bonds. They generally pay a set of interest rate above inflation over a given period, then return the investor's principal. The expected return are between low to medium, and the volatility is low. As the name suggested, there is inflation protection. Currency denomination could be US dollar or non-US dollar. One of the features you should remember is that payments vary with inflation. Next critical asset class is real estate. The ownership of real estate assets, including home or investment property, plus shares of funds that invest in the commercial real estate. The expected annual returns are low and volatility is low. There is inflation protection, and currency denomination is US dollar. Other distinguishing feature is that values tend to rise and fall more slowly than stock and bond prices. Overall, return consists of regular rental income and gains through increase in property price. Last but not least, the asset type any portfolio will contain at least at some point is cash or cash equivalents. They are also called currency or medium exchange. The expected annual return is very minimum. Volatility is low, and there's no inflation protection. Currency denomination could be US dollar or non-US dollar. Other features that you should remember are that it offers high liquidity but loses value over time due to inflation. So here are all 6 asset classes we talked about today. Comment below the asset class that you want to know more about.